Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 46th COT report of this year. As usual, we're going to start off with the changes in commercials positions. So here we go. Our first market to analyze in this review is the gasoline market with an 18% change in commercials positions. A bit larger than average, but if you look at the chart, nothing too unusual, and we have seen a bit of a rise this week in the market, so this signal could be a little bit late for us right now. But let's jump to the 5-year chart and see a wider perspective of the market, how extreme it is. You can see that we've been moving away in the past couple of weeks from this bearish extreme, and as you can see, it has been a successful signal since the price of the gasoline market has decreased significantly. Now, of course, you may ask whether or not this is a bullish extreme that could cause a change in this decline, pushing prices back higher. Now, of course, you have to see on this 5-year chart that there are much larger bullish extremes that could be reached, and we're not at those levels. So it's of course a big question. I would recommend you to be focusing on the last major extreme, which was this bearish, and it is still taking its effect on the market. Moving on to heating oil. Of course, we are going to be looking at a correlating market. So the picture is pretty much the same, very similar. Again, a bullish COT change signal from large speculators and commercials, larger than average change sizes, suggesting a move upwards early next week. Jumping to the 5-year chart, you can see that we've, similarly to gasoline, we've moved away from this bearish extreme, which ended this rally. Of course, the question is if this relative extreme would push prices back higher. Now, you may see the last time we were at such levels, that was actually a successful signal, even though it wasn't as large as the few examples I'm just showing you right now. So this is, of course, a good example for such smaller but still visible extremes, how they can take an effect on the market. Moving on to silver, where we have this 15% change in commercials positions, 15 in large speculators as well. Again, we're talking about a bullish change signal, possibly pushing prices higher. Now, jumping to the 5-year chart, let's have a look at how extreme this market is currently. You can see we have a 559 report extreme in small speculators positions. They're very optimistic about the market, which of course could be considered a bearish signal. Not long ago, a few months ago, we've been witnessing all-time extreme in silver market, and it actually pushed prices higher, but we've came back to those price levels, moved away from those extremes, and this simply suggests that we should be open towards any possible further increases in the extreme, which means there may be a continuation of this downtrend, which of course would result, in my opinion, a further increase in the extreme, the bullish extreme, meaning commercials would go back net long, possibly going to even greater net long levels as we've seen, and large speculators going heavily net short. That's of course up to the next couple of weeks to tell whether that's going to be the case or not. So very interesting situation here in silver market, so let's have our eyes and attention on it. Moving on to large speculator COT Extreme, we have orange juice on top of our list with a 791 report extreme in large speculators, a very large extreme in commercials as well. It's of course quite obvious if you look at the chart that this can be considered a bullish COT extreme, and if you look at the chart, even this 5 years period, you can see how many great examples occur in orange juice when these larger extremes manage to signal an end to a move in the orange juice market. Now, of course, we're waiting for this decline to end, to bottom out, and then expect prices to go higher. Feeder cattle is our next market with a 280 report extreme in large speculators. Now, this is an interesting market, and here you go. You can see that contrary to most other COT reports, here small speculators, as you can see, are pretty much correlating with commercials, which simply means that most probably a lot of small speculators here are actually commercial participants of the market, simply hedging as commercials do. So you can see that over there. Nevertheless, it is a bullish extreme, of course, and this is suggesting there could be higher prices in the feeder cattle coming in the next couple of weeks, month, possibly years. And last but not least, let's have a look at the dollar index with an 80 report extreme in large speculators. You can see that over there. We've checked the dollar index last week, and as I said, the last major extreme was this bullish one. We haven't reached those significant bearish extremes that on this 5-year chart, as you can see, in case of commercials, would mean roughly net short of 100,000 contracts. And in case of large speculators, that would mean above 75,000 contracts net long. So we're not at those levels, which would mean a unquestionable bearish COT extreme signal. Nevertheless, we could experience some decline in the dollar index, but again, focus on the fact that the last major extreme was this bullish one in the dollar index. So that was our last market for this review. You can of course have a look at other COT charts on COT base, and you can also do a much more in-depth and detailed COT analysis where you look at other COT report types, other data types. Of course, you can look at all markets, and you can add the long-term trend to the table. You can analyze volume and open interest scores, and of course you can look at the COT index as well. So I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.